want to start off with sharing some alarming data. Well, it may not be that alarming because most of us believe that most individuals in the trading space fell. The data comes from FPFX Techs. It's a fintech company that specializes in providing technology solutions for prop firms. It covered a total of 300,000 accounts belonging to 100,000 traders from 10 different prop firms. CEO stated this, quote, according to the data in the survey, 14% of traders passed the challenge and obtained a funded account. Of those, about 45% achieved a payout. So 7% of all the traders actually got paid, 7%. How many of you would take a job knowing that only 7% of the people who worked at the company would get paid? You wouldn't do it. So why are we here? We're here because we see the opportunity, because of hope. And so I'm here today to try to help fuel that hope, to help you transition to the small percentage of people that win, because we know it's possible. I have failed more than most. I've lost more money. I've blown more accounts. That maybe might qualify me to share a few ideas that may or may not be for you. But this is why we are here. On your screen, you're looking at a trade that is already occurring. Why? Because I didn't plan this. It is very impromptu. However, over the years, I've had many friends ask me, how are you being profitable? How are you getting payouts? How are you doing this? How are you doing that? Will you show me how to trade? Will you teach me? And honestly, I love to help people and I want to help people. And I think about the past 10 years, how many times I just wish I had some assistance, some help. I was swimming in ideas from information online, and I didn't always know what to trust or what would match my personality. So again, this may or may not be for you. However, I'm going to do my best, God so help me, to have integrity and complete transparency, even when it hurts, even when it doesn't make me look so great. Because one thing I have learned is by being honest and transparent and being truthful, people know what to expect. They know the reality of trading is not all people driving fast cars and traveling the world. I have been a trader consistently part-time from home that I can still supplement my income. In fact, well, we won't go into those details just yet, okay? But what you're seeing on your screen is a micro E-mini trade in a 50K Top Step account. I will also demonstrate in other accounts. I'm not promoting Top Step. I have made profits in 1099s year after year from multiple different prop firms. But this is not about me. It's really about you. So I want to explain what you're seeing on the screen and why we're doing what we're doing. The series that we're going to focus on right now first is Fibonacci to fund it. What we've done is we've anchored the Fibonacci to the previous day's range. When I first started trading and I heard about Fibonacci, I didn't know how to use it. I tried a lot of things. I kind of found through trial and error, hey, if you place the Fibonacci on the previous day's high and anchor it to the previous day's low, then the numbers were much more meaningful. So in that, with each series and each video, we're going to explain in more detail, but let's talk about what you're seeing thus far, because again, I'm doing a voiceover right now as it's playing out because it wasn't intended, it wasn't planned, and I'm figuring out how to use the recording and the microphone and such. So what I did here is you can see the previous day's low, the bottom of the Fibonacci on the hour chart. Right now it's on a daily chart, but the previous day's low. And you can see the negative 62%, which is 61.8. 61.8 is a golden area. When it extends past a previous day's high or low, depending on which direction you have the Fibonacci, that would be outlined as 1.618, okay? So what I'm doing now is I've learned from experience and years of trading that when price extends past a previous day high or low, that it is not uncommon for price to reach for the 161 on the Fibonacci. So that's the premise that you see outlined in this trade idea, is that price has a strong bear move. And so I simply entered looking for where is it most likely reaching for. And we'll talk later about liquidity pools and other previous highs and lows on the hour or daily and what have you chart. But right now, my understanding when I saw this price behavior was I felt very confident. I am going to purchase this challenge right now, and I'm going to use 3 MNQ and get in for a sell targeting the 161.8. The highlighted areas you see are fair value gaps. We are right now on a 1-minute chart. So what I'm looking for is, as price is moving towards the objective I believe it's reaching for, I add fair value gaps to highlight potential areas of support and resistance. This is the way I've learned it or understand it. I give credit, honestly, to Michael J. Huddleston. That's where I began to learn and understand fair value gaps 10 years ago or so when I first started looking at this information. So I give him the credit for that ICT. I am not an ICT trader. I did not go through his mentorship, but I have learned a lot, and some of the framework in which I view the lens in which I view the market, I do consider much of his material. But there was another gentleman, I'm not thinking of his name at the very moment, used to talk about the significance numerically from, he had a PhD in math, and you talk about the market normally turns directions at the 161.8. And when he shared this information, I thought to myself, I have consistently for years seen that to be true. So 61.8 is a golden area to focus on. So what you see on your chart is, once the price began to move in that direction, I began to outline any area it may pull back and bounce off of, kind of like a yo-yo. I think of a yo-yo, it goes up, it goes down, it goes up, and it goes down. The arcade pinball machine where the ball would just kind of bounce around between paddles. That's what I'm thinking of when I see a fair value gap. That price may bounce between one fair value gap to another fair value gap. So what you simply do is you anchor, or you can highlight those areas on your chart, and don't believe me, just go into your chart and watch how price behaves when it enters these areas. Some people have different names for supply and demand zones and things of that nature, but this is the verbiage that I call it. Now, while we're here, let me add, don't underestimate the power of observation. Going into your charts, finding these particular phenomenons, these particular price happenings, and marking them and observing what occurs is pivotal. There is no successful person in any given industry who did not once or at some point spend a considerable amount of time in study mode. It is that time that you're studying and that you're observing and that you're taking notes that's going to empower you to make good decisions in the future. Growth is the key. We want to be green and growing. Now, I'm going to take a moment and go right back over to the performance tab, because as I mentioned in the beginning, you saw the video started already in a trade, and this allows us an opportunity to see that it was a brand new challenge. No active days. I just purchased it from Top Step. It's a 50K account that doesn't require an activation fee, I think $90 or so. Our first trade hit the stop loss and profit. Now, at one point you saw that the trade was more in profit, where if I would have simply have closed the trade when it came down to this fair value gap, I would have seized or captured more profit. Let me share this as a pointer. Many times individuals getting a trade, from my experience, and they have an objective and they wait patiently. Well, swing traders, I'm not. Okay. I can be, but that's not traditionally how I trade. I'm more of an intraday trader. When price begins to kind of hit that pinball machine, I'm okay with reacting off of those price fluctuations and movements and getting in or out of a position. So what I've learned is you could be up $1,000 and then price moves against you and you end up with a profit of $250 or $500. I'm more lean in towards, hey, I may close this trade if it's at an area that I might see a pinball machine, that I might get a little rubber band, or that I may have a price bounce. So that's preference. Here, you see that price has moved back up to a fair value gap, and now it's treating that area as potential resistance or as a potential ceiling, some people may call it. Okay, so now I've chosen to re-enter because I believe my bias is strong, because I see the Fibonacci probably still has a pull on price. And I did a video that talked about Fibonacci and how it is in many areas in the universe and in nature. It's pretty extraordinary. Take a look at that and you'll begin to maybe understand from a technical mindset on why I see validity in using this to help you form trade ideas. It doesn't take anything away from news events. It doesn't take anything away from economics and these other things of fundamentals why people sometimes trade, but I'm probably more lean in to being a technical trader. So here we're going to look at a 5-minute fair value gap. We're looking at the gap between that down move, and it's highlighted now as a 5-minute fair value gap. And I'm expecting price now, it might kind of wiggle in this area, go up and down. And again, if right now we're, $300-400 in profit, if I thought it could bounce here, I would be okay with tightening my stop so I capture something. Or in some cases, I literally will close a trade because it only takes $1,500 on one day in a Top Step 50K because of their consistency rule, the 50% consistency rule, meaning your best day of profit must be below 50% of the total target. So we need 3,000. Our best day cannot exceed 1,500. Otherwise, it'll just increase the amount you need to achieve in profit to be able to win. So my objective, if possible, is if I can secure a 1,500 bag on one day, great. Do I want to force that? No. But if I see that opportunity, I want to participate and not over leverage. I can do so even in this case, as you see, with 3 MNQs, where we were able probably once or twice now, if we would have closed the trade, to have already made $1,500. But I feel very strongly that, as highlighted on the screen where the Fibonacci level is, that 61.8 is where price is most likely being magnetized towards. And so I'm going to be a little patient with my trade idea. What we want to do in these kind of scenarios is practice and watch in your demo account. I am not a financial advisor, nor do I desire from a legal position to tell you what to do with your money. I'm sharing my ideas, my journey, my experiences. However, in sharing, you can go and play with this in the charts. Paper trading, just use a demo account. Technically, a prop challenge is a demo or simulated environment, but you have money on the table. One of the biggest mistakes I made in the very beginning, introduced to trading while I was doing my MBA program, that's when I was probably first introduced to Forex years ago. And I jumped into a live account way too soon, before I had developed what Larry Williams, I believe in his book I read, called How I Made $1 Million Last Year Trading Commodities. Larry Williams, if I recall correctly, talked about 3 key pillars. One is having a mastery of the money. You need to be able to manage the money well. Another is to have the right mindset. And the third is to have a method that works. So you stay in a demo and practice in a demo until you find a method that works. There's a saying, maybe you've heard it, hard head, soft behind. My head was kind of hard, so you understand where I'm coming from. Be good to yourself. Don't do this to yourself. It is so hard to unlearn bad habits. So you want to be in the habit of practicing first in a demo. So what you see on the screen is we're moving closer to our target. In this case, I went ahead with all the yo-yo and gyration and moved the stop loss slightly into profit so I can conserve that in case it comes back and takes me out and I may need to enter again. Probably if I wasn't recording, I would have already captured a few of the trades and we would already be done. But for the sake of showing and illustrating, I'm going to be a little patient through this process. So now we calculate the difference between what we have secured and what we need to complete our objective of $1,500 if we see those trade ideas. So now we're up another $300-400 once again, and price is treating that new 1 minute fair value gap as an area of support. So we may continue to see a little bit more yo-yo, back to the arcade, back to a little bit more pinball. I don't know how we keep landing on pinball, but let's go with it. Even in pinball, remember the metal ball would come rolling down and you just got to keep it in play. You'd hit the button and the flipper and the paddle and shoot it back up, and it would go and hit the lights and up the ramp and hit the target, and you'd make money. And it's the same, similar. You just got to keep the ball, keep it in play, play the range, and you can win. And now we are out of that trade. So now we're up 700. We need another $700-800 to get to our 1,500. So let's go and take a look at the dashboard briefly. Okay, I just kind of clicked over just so you can see briefly that it is a new challenge and we're in the same account and we're not playing any games. We live in a world where people, sometimes their integrity is not always straightforward. We don't want to do that because it doesn't help you without providing truth. Enough on that. Moving forward. So we are entering a new trade. Why? A few things. Number one, price has revisited that 1 minute fair value gap. Two, we are hovering around the negative 27.2%, the negative 27% on the Fibonacci. And just so we're congruent in our conversation and in the understanding, when we're looking at the range of the Fibonacci, you have a high, you have a low, and let's represent the low as 0%. So what is below zero? A negative number. So in respect to the Fibonacci, the next level or the next extension would be negative 27.2 followed by negative 61.8 followed by negative 100. So negative 100 would represent, geometrically speaking, a matched measure move from the range that the Fibonacci is anchored to, that high and that low. These map out visual target zones or target areas of potential, and it also tells us where price may or may not change directions. So now, as you've seen here, once again, as we've moved into profit, several $100s, we may see a bounce again on this fair value gap. At some point, I'm fully expecting it to break through. But this would have been another opportunity potentially to peel off $300 or $400 to be that much closer to my target. So one must consider what makes the most sense given your scenario. More times than not, if someone handed you $300 or $400 and then they said, "Or I'll come back and give you the money later," you would take the money now. So I've learned at times. Now, there's been times where I wish I would have been a little more patient and let it run. But for more times than not, when you see the price is ranging and it kind of goes up and it goes down, then I'm okay and comfortable with capturing smaller wins over time. Another option you may choose to do is to simply pill some off, okay? You can pill off if you have 3 MNQ in this case, and you're in profit, you can pill off one of those contracts and leave two on to continue the run, or take 2 off and leave 1 to continue the run. That's always an option as well. However, more times than not, it's been my preference just to either wait on the trade or pill some off and get back in if I think it's going to continue to bounce around in a given area. Additionally, let me add, I am normally frugal with my trade in this regard. I'm in profit. I move my stop into profit, slightly into profit or break even at a minimum. I'm trying to be a lot more patient for the sake of this conversation and the sake of showcasing what we're doing here, but that would be the common practice to do. You're up 10 points, you're up 5 points, move it to break even. Here I'm showing previous 1 hour low. I've learned over time that price often reaches for previous daily highs, daily lows, previous 1 hour lows, 1 hour highs. It reaches for these areas, so it's not uncommon to find that the price will wick exactly to a former candle that was on a 1 hour chart, capturing that liquidity pool. And then sometimes you may see a reversal or a change in direction. Now, granted, we have predominantly talked about the importance of these Fibonacci levels, but Confluence really is key. You always want to be on the hunt for Confluence and not just taking it for granted that we are at 61.8 or we're at the 23 or we're at this level or that level and assume that price is going to move on your command. So Confluence in that zone and Confluence in that area, like in some of the other points of this video, we pointed out, here's a fair value gap. And that lines up with the 61.8, or it's lining up with the 78.6. It's lining up with our 161 as we have extended beyond the daily's range. An order block, a bullish order block, is the top of the candle prior to the bull move. And the same holds true with a bearish order block. It's the bottom of the bull candle. It's the bottom of the candle prior to that drop. In fact, speaking of drop, here it is, ladies and gentlemen, the moment we've been waiting for. Let's go. We now have a price injection, a volatility injection, and price is now moving towards the desired target that I had in mind. And I'm going to flip over to the performance screen in just a moment, but where you see denoted on the screen, the 61.8 is where I fully expected price to go. And that's why we entered the trade with that plan in mind, with that premise in mind. So we don't want to be haphazard when we trade. We do want to have a plan in mind. Here I flipped the Fibonacci so you can see the 161. And let's go back again. What is the difference between the 61.8 and the 161.8? The difference comes down to with the 61.8 and the 1.61.8, sometimes I get tongue-tied on these, to be honest with you. Level comes down really to direction. The 61.8 or the 61.8% is an internal retracement level, while the 1.61 is an external extension level. Here on the screen, you see that this is Tuesday. We have taken several trades that you just witnessed, and it shows that the average winning trade is almost $500. It's a brand new account. We were able to, your patience seems good. That's interesting. It's a brand new account. We were able to be within the consistency and secure $1,500 for the first day. And as it's denoting here, you see that again, the whole objective here was how can I perhaps showcase the process and help someone, not knowing 100% what the outcome would be, but feeling pretty confident. I tend to have a very high win rate and be able to demonstrate that and create a series where hopefully you can use the fib. As you see right now, it's reached to the Fibonacci extension level that we had in mind, the 161.8, which was the final objective, which helped us to frame our trade idea. So congratulations, ladies and gentlemen. That concludes day one. I can't wait till you see day two. And there are some elements in this next video that you're not going to want to miss. I'm going to give a little spoiler alert. Yes, we passed, but not without a few challenges, okay? There were a couple of challenges with the challenge. So join us and you'll get more information. Let me be very transparent for a moment. For the past decade, I've made a lot of mistakes, but hopefully I've made mistakes that you can learn from so you don't have to repeat my past, so you can get past the barrier of being funded, of getting a payout. That's what we want for you. For many years, I wish I had a mentor, someone to assist me and help me along the journey. So prayerfully, you allow me to do that, to help you to break through and be free. You always got to ask yourself, if I continue to do today what I'm doing, will I have what I want tomorrow? Do you want to be free? If so, join us and we'll see you in the next video. God bless.